Lotus.
Lotus and ACAB. Malawi and Botswana, as Africa grows and really as mining jurisdictions go around the world, they're both relatively strong mining jurisdictions.
Mate, Botswana's the number 2 ranked mining jurisdiction in the Fraser Institute. It's actually ahead of WA, believe it or not. I think like the knock on that Botswanan asset is the fact that it is low grade.
Both of these projects are in Africa, like we said, but they're 2,000 kilometres apart.
The bigger the company you are, the more programmatic buying you get from these indexes, especially if uranium has a bit of a run itself.
G'day, money miners. Go the mighty New South Wales Blues. We finally got a bloody win, and I'm a bit dry. JD Travagliato, I gather you didn't watch the Origin.
No, mate, but you finally had I think I know what the change was between the prior games and the current one. You started wearing a blue hat watching the games.
The Hooteroo hat.
Mate, I caught a bit of the game, actually.
There you go.
Caught a bit, and I checked the score just to say, is Matty going to be in a good mood today?
I'm in a bloody good mood. I still come in the same health way. Anyway, boys, the fans want poem. I can't say it right. Poem. Poem number 2. We released poem number 1 from our mate Chris in the Hooteroo chat, who's got a bit of a natural knack for pumping out a bit of poetry. And we'll why not start off with another poem about the money miners? JD, do you want to read it?
I'll let you read this one. You've got that soothing radio talk.
Righto, here we
voice.
go. I don't think I could do the Prince of Bel Air bloody accent, Trav.
That's all right,
Good
mate.
try.
Mate, I prefer your strine tone.
Here we go. Right. Matty, Travis and Jonas, a motley crew. The Hooteroo money miners to their roots true. 3 blokes from different paths, breaking the mould, a bogan chant to the sound of drills and dreams of gold. Matty, from the depths he did emerge, an ex-miner with a newfound urge. With every strike of pick and spade, his love for the underground never did fade. Travis the banker, from the hustle he fled. For the Aussie outback he was instead led. He'd wank to the drill's rhythm in the evening haze, his heart throbbing with the market's craze. And Jonas the researcher, once trapped in a cube, found freedom in the bogan's jovial rubric. Every nugget of data made his pulse quicken. In the mine of information his fingers would thicken. Together they'd laugh, decipher and trade each headline, each rumour, each stock upgrade. In flannies and stubbies they'd sift and sieve in the rustling papers their dreams live. Hooteroo mates they'd cheer with a grin as the mining news would roll right in. Drills humming their lullaby, loud and bold. They're the Aussie money miners, forever chasing gold. Each wank, a salute to the dreams untold. Each laugh, a story waiting to unfold. From dawn till dusk, from the pit to the tower, they'd harness the drill's unending power. Bloody brilliant.
Well done, Christopher. Oh, mate,
Talented man.
I showed that one to Broads, and I was like, look at this, Broads. Like, we've got one of the money miners has written a poem about us. How cool. And she read it and she's like, if you go missing, I know whose house to rock up to if I'm looking for you. You've been abducted.
Love your work, Chris.
Sorry for there was some mentions of wanking in there, but hopefully it doesn't offend anyone, hey?
Oh, there was another comment on Twitter I found really funny. It was someone commented on the screenshot of the poem and said, there's a great opportunity to rhyme 3rd grade banker with 1st grade wanker in the description of me. So I thought that was quite funny and also a little bit true.
So you're a 3rd grade banker and a 3rd grade cricketer. Boys, what's happening today? I've been on the tools getting the Rusty Eddie ready episode for tomorrow, which you can look forward to coming out Friday about the Abyssinian saga.
Guys, did you catch on Twitter? So we had Peter Dutton confirm he's a money miner last week. And then today I've seen Elon Musk, also a fan of the show, he's tweeted nuclear energy is underrated for sure.
Whoa, mate. I must be watching the show too.
We've got some big fans.
Yeah.
God, he'd have some bloody impact on that. Well, according to Zuckerberg, Twitter's going to be overrated soon with his new little Threads thing. So begin the Zuckerberg-Musk war. Aren't they going to have a punch-up like a boxing match?
A wrestle.
A wrestle.
Is that real?
I'm looking forward to it.
Apparently.
Wow.
Bloody weird. Right, boys. Now, the Abyssinian did come out with a bit of a rebuttal, and look, it'd be only fair to talk present that as well as Eddie and Rusty's side.
Absolutely.
Boys, what was in it?
So, yeah, like you said...
Is it publicly available or it's sort of circulating internally?
Circulating amongst shareholders,
So it came out in two parts. There was a shareholder update, and then as well as that, there was sort of commentary in response to the 249D that we'd obviously discussed with Rusty and Eddie. So
for everyone that doesn't know, that hasn't listened to what was that, 2 days ago? That was the Tuesday episode?
Tuesday's episode.
Tuesday's episode, we gave an intro to what this Abyssinian 249D is. It's a publicly unlisted company, so you won't find it on the ASX. It's for a lithium project in Ecuador.
Ethiopia.
Sorry.
Head
back and listen if you want to. It's a good chat.
Absolutely. So the 249D response, it's prefaced with commentary to address incorrect info sent to you by minority shareholders. So that's obviously referring to the 249D that Rusty, Eddie and the guys at Tribeca and United Funds are undertaking. Some of the highlights from that email were, in quotes, criticism of the board is unfounded and totally without substance. The 249D amounts to an attempt to acquire control of a world-class asset without payment, and as highlighted in the attached shareholder update, the board has made significant progress to secure funding for Conticha and in the short term to list the company on overseas exchanges. So as we discussed on Tuesday, we ran through the sort of 10 points that the minority shareholder group were addressing and reasons where they sort of had seen that the incumbent board had fallen short. And I'll just go through a couple of the quotes that were responses by the current Abyssinian board to Rusty and Eddie and the team there. The claim that Abyssinian doesn't have ownership of Conticha is incorrect. Abyssinian claimed the vesting conditions regarding issuing stock following the acquisition of the Hasai project were satisfied, so i.e. that the shares were rightly issued. The board claimed the assertion that they tried to unilaterally extend their performance rights was entirely false and misleading. And lastly, they claimed that it was also false that funding was secured in early 2022 on the messaging that Martin Rowley and his team would become involved in the management of Abyssinian. So to sort of round out this on what we've got to say on Abyssinian, we'd just like to make the call out to Neil Warburton, Stephen Miller or Bruce Tinney that the line is open here at Money and Mine. If they want to come on, say their side of the story, we'd be more than happy to hear from them. And that we've also got the longer form chat with Eddie and Rusty coming out tomorrow. And it expands upon the Abyssinian sort of case, but also broadly on the Corps Act and sort of director misalignment that the guys have brought to our attention and that they see throughout the industry. So it was a super interesting chat. And we're keen to hear what the money miners think about that.
But I guess just to reiterate what you said, this is from the side of the 249D. We'd be happy to hear the other side from the company too.
Mate,
to
could you
facilitate
imagine
that.
Could you imagine?
Put them all
exactly.
together.
You know what I was thinking, mate. Oh wow, that would be wild.
It'll be via phone, so there'll be not
let's get them in person.
Physical punching distance.
We might need to use the mute buttons if we brought them both on at the same time.
Yeah. So look, lines are open. Happy to facilitate. We are a middleman.
Yeah, that'd be juicy content. But Neil Warburton in particular as the chairperson, we'd like to have you on the show.
Too easy, right, boys? Lotus.
Lotus and
mentioned Lotus in the uranium chat, was it?
Yeah, they got a shout out. They're a sort of circa $250 million ASX uranium developer. They've got an asset in Malawi. So they're looking to create a bigger uranium-focused, African-focused uranium business, and they're going to go about this deal with ACAP through a scheme of arrangement. So it's one new Lotus share for every 3.54 ACAP shares held.
They end up with about 80% of the pro forma?
Yeah.
79?
Yeah, roughly 80%. And the deal is essentially been pitched to ACB, that's ACAP, at about a 20% premium to the last traded price. So they've also got one of the major shareholders, I think it's a Singaporean group, that hold about 38% of ACAP to confirm already that they'll vote in favour of the deal. So
can't get a deal done without their support.
Exactly. Scheme of arrangement. So it looks like there's acceptance on both sides of the table. Lotus, as I sort of touched on their Malawi asset, it's called Kaya Lekera, and it's a restart project. So I think the restart capex was 88 million US.
Yeah, it used to be a Paladin asset back in the day.
And then ACAP brings to the table LOT.asx, which is an earlier stage uranium project in Botswana. So Malawi and Botswana, as Africa grows and really as mining jurisdictions go around the world, they're both relatively strong mining jurisdictions.
Mate, Botswana's the number 2 ranked mining jurisdiction in the Fraser Institute. It's actually ahead of WA, believe it or not, in the latest rankings.
Yeah.
So
what deems that ranking, like in terms of country risk, or just as in
it's across the board. It's the
abundance of minerals.
Oh, there's a whole bunch of factors they take in, such as
everything.
Another one is like the ability to permit projects there. For example, Victoria has a way worse ranking than WA because of permitting.
It's not to do with like the quality of asset you're going to find there. It's to do with, can you turn it into a mine? What are the, all the standards, the environmental standards, how is permitting, how achievable is permitting.
And takes into account sovereign risk as well, does it?
Yeah, it does,
That's at the core of it.
Policy regimes.
Oh, well, once these heritage laws come in 12 months' time, that could see us slide down if that permitting
it could. It's exactly those sorts of things.
Becomes more difficult.
And you looked into the asset that ACAP bring to the table there, Trav.
Yeah, mate, I did take a look at it. And I think like the knock on that Botswanan asset is the fact that it is low grade. It's only 321 parts per million. But if you focus on the higher grade portion of it, which Lotus may in fact choose to do, and you give it a higher cutoff grade, call it 300 parts per million cutoff grade, then the resource becomes a bit higher grade, 103 million pounds at 450 parts per million instead. So it'll be interesting to see what their strategy is with it. I've seen some interesting commentary out from Shores on to that extent, which we'll touch on a bit later.
Gotcha. Okay, so let's sort of look at the value that these companies are pitching. So both of these projects are in Africa, like we said, but they're 2,000 kilometres apart. So there's no clear production synergies between the two assets. It's not like you can have one mill or anything like that. You get the obvious benefits of scale though. So it makes me think of the deal we spoke about with DDH1 and Parenti a couple of weeks back, where by being a bigger company, you can attract more attention from institutional investors. I think, Trav, you'll touch into the ETFs that take notice and they buy in bigger weighting of bigger companies. You also have the sort of obvious corporate synergies. You don't need 2 teams to run the different companies. You can just clean out one of them. Yeah,
I look at this deal. It reminds me a little bit, but there was this merger between Deep Yellow and Vimy in the uranium space a bit more than 12 months ago from memory. And it was the first bit of uranium M&A in a long time. Like uranium M&A just seized for quite some time until that deal.
Deep Yellow, of course, the old Paladin management team.
John Borshoff there. Yeah. And so they acquired Vimy. There was, I think some people were maybe a little bit curious as to the rationale there, because the assets are in different jurisdictions, different countries, different risk profiles, etc. And I kind of look at this deal not necessarily with the same lens, but a somewhat similar lens. I think it's not to be understated, the transaction rationale of management when it comes to just like enhanced index inclusion as well. Like a bigger company, larger market cap, larger free float potentially gives you a greater propensity to be included in these uranium indexes, and there's a few of them floating about. I haven't done the analysis myself to see what the thresholds are for inclusion into these indexes, etc. But I'd love to see if someone has done that work to get a copy of it, because I'm sort of thinking in my head, the bigger the company you are, the more programmatic buying you get from these indexes, especially if uranium has a bit of a run itself, and that's an interesting piece of rationale there on that front. The other point that I think is like a real benefit, it just comes from having slightly deeper capital pools available to them to finance the project, because they now have a more diverse shareholder base to draw upon for equity. So you mentioned that $88 million capex that Lotus need to restart. They've got FID on that project, which the market is expecting in the second half of this calendar year. When it comes time to fund that, they've now got deeper pools of equity to potentially tap into by virtue of the fact they've got more diverse shareholders.
Gotcha. And you touched on some commentary from Shores, I think. What did they have to say about the deal?
Yeah, Andrew Hines at Shores, who does a good job covering the uranium space there. He says In our view, this appears sensible strategic acquisition, which provides Lotus with a development uranium asset beyond the restart of its Kalakira uranium project in Malawi. Lotus is acquiring a large uranium resource at the very low cost of around US 21 cents per pound compared to the global average EV per pound of around $2.60 per pound for undeveloped uranium projects. So, I mean, it is that low multiple because it's a low-grade project. So,
Well, you're talking about that grade, so 450 parts per million. Remember Matty Langsford talking about that TSX uranium that was, didn't he say something like got 15% uranium drill hits or something like that?
yeah, that was the F3.
FU too.
Yeah.
But that's
Yes.
Yes, I'd be interested to know what like if you hear 5% copper, you're like, oh, that's pretty good. It'd be interesting to see what the if any of the money miners want to inform us on what uranium grades are good and what are bad.
The grade distribution is so interesting here. Nothing, like from an undeveloped project perspective, nothing compares to next gen. Like it's literally that high grade that it's bloody radioactive.
That was another one we spoke to Maddie about.
Yeah.
What's the grades of that? Do you know off the top of your head?
Oh, I'd have to dig it up, but it's just, you look at I've seen a bar chart comparing it and it's just like off the charts compared to the
So
rest.
it's like a Mount Weld, or a Green Bushes. It's that outlier.
Yeah, there's also different mining methods as well. Like keep in mind, there's like the hard rock mining and
In situ mining as well, which is common in Kazakhstan.
Yeah, you could imagine the site-based procedures on mining a high-grade uranium deposit to protect all the workforce. It'd be very stringent.
Yeah.
A lot to consider. So, right, next one. AIC Mines, ticker A1M. Your mate Aaron Colleran, Trav.
yeah, mate. He's a straight shooter, Aaron. So
Maiden Reserve at Jericho was today's announcement. So
So their flagships, obviously, the Eloise Copper Project, North Queensland.
they're producing a bit from there. So need to clarify that I own a couple of these.
Oh, you're the ding, ding, ding.
Ding, ding, ding. Yeah, I picked up a few of these a few months back. So like you said, the Eloise project near Cloncurry, so in Queensland. And this particular reserve, Jericho, which they've come out with today, sits about 4 kilometres from the mine that, like I said, AIC is operating already. So the reserve today is 1.8 million tonnes at 1.8% copper and 0.3 grams per tonne gold. So all up containing just under 33,000 tonnes of copper and just under 20,000 ounces of gold. So it converts a bit less than 20% of the resource into reserve. And the company expects, as they do more infill drilling, they'll expand this, and that infill drilling is already underway. So if you combine the two projects together, Jericho and Eloise, it combines for 4 million tonnes at the moment at 2% copper and half a gram per tonne of gold. So all up 85,000 tonnes of copper and 63,000 ounces of gold. So no huge scale or anything. And importantly, on the met front, the company has said that the understanding they have of the met at Jericho and the testing they've done so far shows that it's pretty similar to Eloise. So
if you put a question out on the underground mining forums on Facebook and that, and you ask what is the hottest mine you've worked at or hottest mine in Australia, Eloise is one of the most said answers.
Yeah, I can imagine.
Hottest underground mines in Australia.
And it might be getting bigger with this. So they're looking to expand the plant there. One quote that stood out to me from today's announcement was that preliminary financial modelling indicates that a staged expansion will provide the best return on investment and minimise production interruption. So they still need to get environmental approvals and a mining lease for this Jericho tenements, and they're expecting this within 9 months, so in the first quarter of next calendar year. And then we'll see the box cut go in, the decline go in, and mining should be underway, and ideally for the company producing by early 2025. So just to
Yeah, sorry, I remember the Precision guys always talked pretty favourably about AIC. They seem to be pretty not bad at generating cash. Correct me if I'm wrong, you boys.
Yeah, so they got 37.7 million in cash as of the last quarter, although they had done a raising not too long ago, and that puts them at an EV of 145 million roughly. There's a couple sort of pros about the team, like you touched on Alan Colleran. That's
Aaron, not Alan.
Pretty sure I said Aaron.
Oh, I heard different.
It's
We'll see what the recording has to say.
We say, oh yeah, I reckon Trav's right. Sorry.
So they've got a pretty well-regarded management team. That's one of the pros that people draw to this. They're a high-cost producer though, so they might be producing a bit of cash at the current levels, but it's not an awful lot. But they've got a very high sort of leverage to that copper price, which we'll get into. So overall, it's a pretty solid announcement, though obviously nothing massive. I'm pretty keen to see them convert more with the infill drilling of that resource into reserve. And then we've got our eyes peeled for what that CapEx bill will be. We've seen numbers between 25 and up to 50 million needed to sort of scale up the production there so that they can hit that sort of 20,000 tonnes per annum copper produced in a few years' time. So
I think when I did talk to the Precision boys about it, was a couple of years ago when copper prices were a lot higher. They're obviously a lot lower now. I think they were above $4 a pound.
Yeah, a couple of points to make on
$4 not too long ago. Yeah.
Yeah, a couple points to make on it. One is keep in mind the history of this asset. It was in private hands for a long time. It was
Piggy Bartlett.
Piggy Bartlett's
FMR, wasn't it?
Yeah, and the word on the street was that it was like there wasn't much development CapEx spent for a lot of years there, and the way that AIC have gone about it is they spent the money on development, and the aim is to reap the rewards of that by virtue of lower mining cost over time.
Bill Beeman was the general manager at Eloise in his younger days when he was with Barminco. He went over there to be the GM of the project for Piggy.
And FMR still by far the major shareholder.
Yeah, as part of that transaction. And I think the other thing to keep in mind when we're talking about the history of the transaction as well is it wouldn't be surprising to me if the strategy when Aaron acquired Eloise was always to consolidate it with Jericho. So the history of Jericho kind of is part of the story there, right? Because Jericho, they acquired that via this the merger with Demetallica. Now Demetallica was formed because Andromeda merged with Minotaur, and it was actually Minotaur's ground. So it was a Kaelin deal that sort of facilitated this entity becoming acquirable all in the long run.
Minotaur, God, I remember. Was it? I think Tony Lecantro, always on Sky News Business, plugging Minotaur back in the day before probably different asset laws. But
Minotaur was like the minority JV partner of the Halio site thing in South Australia, but they also had this ground near Eloise. I think at one point it was even that ground was somewhat of a farm-in or JV with Oz Minerals or something, and that got tidied up at some point in time too. But for Aaron to bring it all together, there's a bunch of transactions that went there, and now he's got the two things together. He's got control of them, and he's spending the money to drill them out and hopefully turn it into a one of the very few copper producers on the ASX. Hopefully they can produce cash for shareholders.
Mate, nothing gets my rocks off more, Trav, than a good bloody historical rundown like you've just done, mate. That's bloody sensational, mate. I can love it. Yeah, go check out me bloody Atlantic Windamara one yesterday. Yeah, that got me going.
Yeah, I think that's the perfect way to round out on AIC. They're one of the few ways you can get exposure to copper on the ASX. And they're a highly leveraged story. So they're a high-cost producer. And if the copper price goes for a run, like many sort of people think it will over the medium term, then you're going to see the advantage of that.
Do you know if they're fully exposed to this copper spot price, how the contracts and whatever the offtake is? Is it
I believe they've got no hedging in place, if that's the question.
Too easy. Right, is that it for the day, boys? Home and a couple of companies.
That's it, mate.
We've got BD to do.
We've got BD today. And we can't say who with.
No. And a treat for the money miners tomorrow. So our chat with Rusty and Eddie.
In for the chat with the infamous Rusty Delroy and Eddie Rigg.
Infamous?
I think Rusty is infamous. He is an enigma. I don't think he's put think he's put himself out on a podcast ever in history.
I'd say maybe elusive, maybe not infamous.
He's an enigma. He's very enigmatic.
Sure is.
Absolute GC. Bloody too easy, mate. Boys. Let's bloody rip this out and go have some business development refreshments.
Love it, lads. Hooteroo.
Hooteroo, money miners.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.